Do you have any questions about earned wages and income in regards to your unemployment benefits? If you do, awesome, because in today's video, I'm gonna be discussing what is considered reportable wages and what is not considered income, and what are the possible repercussions if you do not report your wages. What's up, winners? My name is Naam. If you're new here, welcome. Here we talk all things personal finance and credit. Start out by subscribing so you don't miss out on any future videos. It's been a little while since I made a video about unemployment, but since I've been receiving more questions about unemployment in regards to sources of income, so I decided hey, why not make another one? First off, let's talk about what is considered income or reportable wages. The first thing that comes to mind is pretty much anything that you get from a regular employer, meaning that you get a W-2 every single year when you try to file your taxes. If you make any money or receive any sort of income from any employer that offers this, then it is a reportable wage. It doesn't matter if you have one or two jobs. Any money that you make from employers like this, it is reportable. Now let me give you an example of the Minnesota definition of wages. Even though this pertains to Minnesota, this is going to be very similar to most states out there. So according to the Minnesota unemployment website, it says that if you work, you must report your total hours worked that week, total gross earnings that week before deductions and taxes. Earnings include wages, tips, salary, commission, and cash, self-employment income, and the value of any rent, goods, or services that you receive for working. So I'm pretty sure by now we're all on the same page of any time that you get paid from an employer, it is considered reportable. I live in Southern California, so there are many employees out there that do get paid under a table and receive cash. The main rationale behind this is they're trying to avoid paying taxes. But this is where it does get a little messy, because if you want to qualify for unemployment and you also get paid cash, technically that cash is supposed to be reportable to the state unemployment offices. So if you are in an occupation that receives tips, any type of cash tips is also reportable as well. Now let's just say that since you've been unemployed, you picked up a side hustle. Maybe wherever you're currently living, you're able to get some rideshare fares or deliver groceries to your neighbors. In this case, since the main objective here is to turn a profit, this is considered a wage. On the other hand, instead of working for another company, you decided to start your own and you started to sell t-shirts online. This is where it may get a little confusing, but you gotta be careful on how you pay yourself. Any gross earnings that you do make has to be reported. So going back to our example of online t-shirt business, let's just say that you made $1,000 worth of sales for week 1 and you pay yourself $1,000. In this instance, you would have to report $1,000 worth of earnings. Even though there is a cost to get t-shirts, maybe ink to print it, the shipping costs, and any other associated business expenses, you would still have to report what you paid yourself. So it would behoove you to get a separate business checking account, withdraw money from that account whenever you do decide to pay yourself. This will make it much simpler to keep your personal and business finances separate. Because I understand that if you own a business or trying to start a business, there's going to be expenses that are going to be associated with it. So anything that you make, there's always going to be a portion that's going to be allocated to expenses, and whatever is left is going to be a profit. So let's just say that you continue to sell t-shirts, but you only receive your payments on week 4. That means on week 1, 2, and 3, you are still eligible for unemployment benefits due to the fact that you did not receive any payments during those weeks. So depending on your business entity, it may be a little bit different as well. But again, this is not legal advice. So it may be best to contact your unemployment offices or your CPA or whoever does your taxes to see what is the best route. Now, let's move on to the topic of what is not considered income or reportable wages. A common question that I've been receiving recently is that what if I decide to pick up old things that are lying around my house and decide to sell it online like through Facebook, eBay, or Craigslist? Is this considered income? The short answer is no. The thing is that yes, you do have the intent of selling these items that you're lying around your house to make money, but this is not your business. Just because you decided to sell some old clothes on Poshmark, this would not be considered reportable wages. On the other hand, if you do make a lot of income from this and you are self-employed selling or reselling old clothes on Poshmark, then that would just be a whole different story, then it would be reportable. But if you're just an average Joe or Jane and you're just trying to sell something that you have lying around your house, this would not be considered a reportable wage. All right, so now let's talk about rental income. I've had this question come up in the past, and recently people have been asking me about this as well. The legalities behind rental income may differ depending on the state, because finding the answer to this question is quite difficult because a lot of unemployment websites do not answer this source of income. So from my understanding, since rental income is not listed as one of the sources of reportable wages on many of the unemployment websites, then it will be fine to assume that rental income does not count. Even though this is just an assumption of mine, it will be best to ask directly with your unemployment offices. One credible source that I was able to find on this particular topic is California Association of Realtors. This is an organization for real estate agents in the state of California. So let me hop on my computer and read you the answer verbatim. It depends. Passive income, such as rental income, does not need to be included in reporting income to the EDD, but income from self-employment does. So if you own rental property and you didn't earn a living from managing it, it is passive income and it is not required to be reported. If, however, you are managing the rental property as a form of employment, your rental income should be reported. So to clarify this a little bit further, if you receive any rental income from your properties that you do own, this is not reportable. But on the other hand, let's just say that you do have some rental properties, but it's in a business that's formed in a way where you get paid a 1099 or a W-2 by managing these properties. Then yes, this would be considered a reportable wage. Now let's move on to capital gains. Since the rise of Robinhood and the past couple of weeks, people have been making quite a bit of money in the stock market since they have all this time now to learn how to trade. Now the real question is, if you made any money in the stock market since you sell the stocks at a profit, is this considered reportable income? And the answer is no. Any capital gains from stocks is not considered a reportable income. Again, after reviewing your state's definition of what wages and incomes are, majority of them do not state capital gains as one of them. So just to make sure that you guys understand what capital gains are is just the amount of profit that you earn from a sale. So for example, let's just say that you bought GameStop at $20 and you decide to sell it at $400. That $380 difference does not need to be reported. All right, so with that out of the way, one thing that you got to make note of is that whenever you do have any capital gains, there's going to be a capital gains tax. This is a little bit off topic about unemployment, but whenever you do file your taxes, you still got to report capital gains. And depending on your federal and state income tax levels, this is the amount of tax that you will need to pay. So again, capital gains does not need to be reported. This also includes selling stocks for profit, any dividends that you earn, or any interest that you earn from your savings accounts. All right, so now let's move on to Social Security benefits. Based off my research, pretty much all the states out there do not recognize Social Security benefits as a reportable wage. So any money that you do receive from Social Security does not need to be reported. All right, so by now, you guys should have an understanding of what reportable income is and what it is not. Now let's talk about what if you don't report your wages or your earned income. So as a warning, if you make any false statements or withholding information to receive benefits, this can be considered a felony. This means that you can receive a fine, the loss of your benefits, criminal prosecution, and you may have to also pay this money back. Additionally, this may disqualify you from future benefits and it may stay in your record, which may make it a little bit more difficult in the future if you decide to get unemployment benefits once again. All right, so by now you guys have an understanding of what the repercussions are of having fraudulent applications, but how does the unemployment offices actually figure this out? In most cases, the state unemployment offices, they do conduct audits by cross-referencing employer information alongside with your unemployment claim. They just gotta make sure that the information does line up with the employer's information alongside with what you're reporting. Another way that people get caught is by snitching. Essentially, these people are trying to take advantage of the system. So if anybody out there who try to flaunt their unemployment checks and stuff like that, past employers, family, friends, or whoever you see on Facebook, they can report this as a fraudulent unemployment activity to the unemployment offices. Then they could do a deep dive of an investigation into your profile. So even if you don't think that you may get caught, it may take months or even years down the road for unemployment offices to catch on, because right now, state unemployment offices, they are pretty swamped. So their investigations may not happen right away. I'm pretty sure you guys have seen the news about unemployment fraud, and it has cost America $36 billion. Some states, such as the state of California, almost has $10 billion worth of unemployment fraud cases. So whatever you do, try to be honest. Don't try to game the system because it's not worth getting in trouble for. Plus, you're taking money away from people who actually need it, and Americans is going to be paying for this money one way or another. Well, there you guys have it. Today we talked about what is considered a reportable income, what is not considered a reportable income, and what happens if you do not report. If you guys haven't already, make sure you give this video a like because that really helps support the channel. I'll see you guys in my next videos.